Okay. Good morning, good afternoon. Having some slight issues with sound. So I hope you can hear me okay, and I hope you can hear me okay. I know you can see me all right. I hope you can hear me okay. Hey Basanta, how are you doing? Good afternoon, good morning. Hey Pips Apprentice, good morning. Hey Jumarinas, hey Natuku. Hey Christina, hey Neymar, hope you're all well. Alright, I think that sound should be okay. Hey Grandpa, hope you're well. Good afternoon to you. Thanks for that, Naren. Just wanted to make sure. So yeah, mics here was supposed to be charging, but didn't end up charging, so I ran out of battery on the mics. But yeah, at least you guys can hear me okay. Hey Jimmy, how you doing? Hey Nav, good morning. Good. Okay, so you can hear me all right. If you are new to the session, do drop a message and say hi. Let me know where you're joining us from. And for all the regulars, big welcome back. Thank you again for joining me on this daily market analysis. Today we do have the US CPI data to be released. That's something to look out for, look forward to. And then also the FOMC interest rate decision later tonight or early tomorrow morning for me. Okay, so we'll watch out for that. We'll talk about that during the session. And also for everyone on Discord, if you're not already on Discord, the link for the Discord channel is in the descriptions. Tonight we are at 8 p.m. GMT plus 8. We're also going to be having a Zoom session. So, have a chat before the news release, the CPI news release, and then ideally look at some possible revise or update any possible setups in the lead up to the FOMC. Okay, so if you haven't already, do make sure you plan out your time and join me on the Zoom session. Now, what else I was going to say? If you can help me out, do remember to click on that like and subscribe button. The thumbs up button does help us get more people onto the stream. So I really appreciate that. And if you have any questions at any point in time, please feel free to put it into the chat and let me know. Okay. Hey Angel Case, how are you doing? Now, with that said, quick disclaimer, any information contained on this webinar should not be construed as advice and is presented as educational material only. The contents of this webinar are not intended to be a recommendation to trade a financial product, as your objectives, financial situation and needs has not been considered, and you should consider its appropriateness to your circumstances. Now, take that away. What has happened since the last time we spoke? Click one back, right? Whole bunch of nothing yesterday in terms of news, right? Didn't see the markets move too much. You see that last night yesterday we were right about here, right? I'll zoom in a bit. The dollar did push up slightly as we kind of expected, but it held at that high of 105.45 and then started retrace and is now consolidating just below that previous swing level or that swing area there, right? That dotted orange line. So now still consolidating, still sitting there, looking out for that because nothing much happened from last night. Through to today, we did have the UK GDP month-on-month being released. It was a 0.4%. It was expected to be 0. It came out at 0. The immediate reaction from this news on the pound dollar, zoom in, right, at that 2 o'clock was, it sat there on release of the news, it spiked up, well, it sat there, it spiked up slightly, and then after that, traced back down, right? It traced back down at 0%, previous 0.4, it's showing a bit of a slowdown. That's why it came back down. I was a bit surprised. I put it into the Discord channel where I was a bit surprised that it's creeping up slightly, but it's holding at that level, so it pushed back down now, still consolidating, performing very similar to what the dollar is doing. Dollar consolidating in that range, the pound dollar consolidating in this range. So everything pretty much sitting right across, waiting for what's to come, right? At 8:30 p.m. tonight, for me, we do have the CPI year on year. It was a 3.4. It's expected to be a 3.4. I was just yesterday, I was thinking that it might be a bit higher, maybe a 3.5, but now I'm thinking that, right, I'm referring back to, let me just click a bit more. Referring back to the average hourly earnings, I was thinking, right, a 0.2, expected 0.3, came out at 0.4. Wage inflation climbing up slightly. That's why I was thinking that the CPI for tonight could be a little bit higher at 3.5, possibly, right? And thinking about that, there is the chance that it could be a little bit higher, but I'm thinking maybe it's going to stay at 3.4, right? Maybe it's going to stay at 3.4. And if it does come out at 3.4, what I'm looking at here is a bit of that shoulder, head, and shoulder pattern with a bit of a skewed neckline that way, right? So I'm thinking that maybe, I was looking at that for it to push back down. Maybe we might see some weakness come back into play on the dollar index, especially if there is a bit of a slight slowdown on the CPI, on inflation growth, or if it even shows that there's no increase at 3.4, we might see a bit of a weakness on the dollar come back into play. And in addition to that, at 2 a.m. GMT plus 8 tomorrow morning, for me, at 2 a.m., we do have the US FOMC statement and Fed funds rate 5.5%. No expectation for them to cut rates this time round, so expected to stay at 5.5. I did see somewhere, I can't remember where I saw it. I saw somewhere that there was the Congress or Senate or some government body was writing into the Fed Reserve requesting. I don't know how true is this. I don't know. I didn't verify the document. But it was some document saying that it was requesting that Chair Powell start cutting rates, right? I don't think, or the FOMC or the central bank is supposed to operate independently of the government. So I don't think a request like that is going to make them sway in their decisions. And I don't expect a surprise at this point. We can't rule that out, but I don't expect a surprise at this point. But like we said yesterday, although they held rates at 5.5%, this was on the 2nd of May, you see that, where am I? Back. I did this yesterday. Oh wait, too far. Okay, here we are. On the 2nd of May, when they held rates, we did see the dollar index go from a 106.24 down to within the hour down to 105.74. So a good drop, and then it was outside of the Bollinger, so it came right back in and then right back down again. Right, so it dropped, press conference came back up slightly, also Bollinger came back up slightly, and then resumed its downward push through the couple of days, right through the next couple of days. So that's what I'm kind of expecting again for this meeting, which is why I'm looking at this and I'm thinking that if it doesn't push up, right, if the dollar index does not push up to that resistance, well, yesterday's view was that we could see it push up to the resistance on the FOMC decision there, expecting it to push right back down. But now looking at it, if it doesn't push up with that head and shoulder pattern, main level that we're looking at is this 23.6. Take that away. This 23.6 level, where if it breaks past that neckline, we could see it hit significantly to the downside. Okay, I'll take that one away. I would actually revise this up to this point because that's a swing high. And then that 23.6 makes a lot of sense because that's where we're looking at it to drop. I think that, let me see, do I need that? Yes. I think that this area is going to be quite crucial for the dollar index in the lead up to, or in the lead up or as a result of the FOMC meeting later on. Okay, party grandpa says Biden needs more votes. It's like you don't want Biden. I'm not going to get political, but you don't want to get looking at the videos of Biden. You don't really want Biden. You probably don't really want Trump, but economy was doing a lot better with Trump as well. So it's that balance of who to vote for. There's a lot of uncertainty there, but again, central bank should be operating on the mandate of their 2 to 3% inflation target, on the mandate of making sure the economy is performing at its best and keeping the employment numbers strong, independent of what the government does. So we'll see. We'll have a look at that. Not very far. Well, it's 12 hours away to 11 hours to the news. So we'll look out for that. Good morning, Erwin. How are you doing? Hey, Diana. We will look at Aussie yen as well. So we'll look at that. Okay. So with that idea, keeping in mind there's nothing much for now. So keeping in mind the CPI data to be released at 8:30 and also the US FOMC decision and press conference to come at 2 a.m., 2:30 a.m. I think that what I'll be looking for on the dollar index is, at the most, if it does push up, we're probably going to see it get topped out along that 105.60 level, right? And then I'm looking for it to push back down towards the 105 and possibly even lower if it breaks that support. Okay, so essentially, let me just draw it out and I'll type it up, is that the dollar index now is consolidating at this point. Either I'm looking for it to either sit there and then break the support to head down, or to trace up slightly, test that resistance, and then reverse back down towards that 105 support level first. Beyond that, we can see further downside, possibly to that 50% level there. Okay, I don't see it, right? Remember that we saw it go from 106.24 to 105.74. There is likely to be a drop, but not a big, crazy drop, right? So it'd be that kind of range would be reasonable. So now thinking of that, okay. So now thinking of that, looking at the dollar index, writing it up, 12th of June with the Fed Reserve, FOMC decision pending. We're looking at the dollar index. I think most likely we're going to see that test. So we're going to see a could test and reject 105.60 resistance. before trading lower with a dovish FOMC down to 105 support. Okay, that's what I'm looking for. What is the dot plot? We haven't referred much to the dot plot. Dot plot was quite, I would say, was quite big. Was quite big on the. Wait, let me just try to bring it up. Was quite big during Yellen's time, during Fibonacci for sure, but Yellen as well. Not so much now. Not so much now. What am I typing? Okay, dot plot FOMC 2024. Let's see. So based on the daily FX, I just searched dot plot. So based on that, dot plot to reveal fewer rate cuts in 2024. We're looking at it. Wait, when was this? Yeah, this is recent. This was just yesterday. We're looking at it staying, well, in 2024, we're only looking at it at 4.75, just below 4.75. No, 4.75 range, with a lot of it staying up there all the way through to 25, where we're looking at it break. So, you know, in the next 6 months, we're looking at it only coming down from 5.5 down to about 4.75. Maybe two more rate cuts to come. Maybe 1 or 2 more rate cuts to come. That's why they're saying that we're looking at fewer rate cuts in 2024. But so far, the dot plot looks like, based on this, yeah, I'm right, 75, yeah. I think September, I think July and then September, and then they're gonna sit and wait. I still do think that there's 2 more rate cuts to come. Okay, then if you look at, just to add on to that, if you look at the CME Fed Watch tool, when it loads again, we're at 99.4%. It's never 100%, but 99.4 through to July, where we're looking at a 91% chance. September, pretty much a bit even out, and then through to November, a bit more skewed towards a easing stance, right? So we might be looking at, maybe July might even seem too early. September again, right? This makes me cast my mind back to when I started the year, and I thought April, I think it was April, was a good time for them to cut. How wrong, you know, how time has pushed it all the way back. So now we're looking at a possible July, more likely a September rate cut. But pay attention to the statement, pay attention to the press conference, might give us a hint. Generally just looking for a dovish stance from the FOMC to push the dollar index back down. One reason for that is because it can go up, but I don't see a big reason for it to get to 106.40, right? It could get there, but I don't see a big reason for it. I expect that 61.8 to potentially hold as a good resistance level. Okay, so now with that said, right, anticipating, we're going to do again as usual in the lead up to a big news, a good news, bad news, or stronger or weaker dollar scenarios. Looking at the Kiwi, right, we had that from yesterday, expecting it to test and reject back down. It came close, didn't trigger that trade. Take that away for now. Now looking at this, again, that trend line is holding. It came up to test 50 as recently as 1 hour ago and rejected the 50% retracement level. But you see that short-term move, and even if I put in a channel here, right, you see that it's been pushing up. I anticipate that we could see this sit there, maybe trade up again slightly. 61.8 would be right at that point there. Might be a better place for it to fall from that 61.8 level, right? So I'm thinking that we might see this sit here, maybe push back up, and then after that turn back down. Overall, what I'm looking for on the Kiwi would be in the I'm actually more tempted to think, let me have a look at Aussie first. Yeah, I like the Aussie to drop a bit more. Okay. This one, I'm thinking that what if it pushes up? What if we see the dollar index do weaken, right? If it does weaken, 6170. So break out of that. 25 stop. 45 take to the upside. So break above that 61.8 level, above that, and then it pushes higher towards that resistance. I'll keep that as, for now, as a dollar weakness scenario. 6170, 25 pip stop loss, 45 pip take profit to the upside. Oh man, why does that always happen? Okay. We're looking to buy at 0.6170, stop loss 25, take profit 45 to the upside. You could even do this at 20, but I think 25 would be reasonable. This would be on a dollar weakness scenario. Then on to the Aussie dollar, right? We were looking for this to come down and test that area. It didn't, and in fact, it still held that point. Again, right, you kind of expect the Aussie and the Kiwi to look quite similar that way. But I like how it hasn't gone that much higher. Right, got up to that 38.2 and it's showing a bit of a push. I would say that in the event we see the dollar, instead of getting weaker from that resistance, it breaks right through that resistance. Again, I would think for now, if it does push up, that could push down to this area. I would be placing a position 6560, right, as it breaks that low there. Good momentum to the downside, 20 pip stop, 65 to the downside. So I'm looking for it to push down. If the dollar does keep getting stronger, push down to this point here. For now, in between now to the FOMC and CPI, you could see it test this area and then break that whole point, that 38.2 level, and push down. I don't see 50 as a very strong level. I see 61 a little bit more. So that's why I see that move. Okay, so 6560, 20 to 65 to the downside. We're looking at selling this at 0.65, 60, 20 to 65, 65, 60, stop loss 20, take profit 65. This is on DXY strength to the downside. Okay, good. Then I'm happy with that. Why don't you trade it if it breaks channel and slightly retrace back from there? Look too short. You're talking about the Aussie. I think that why I wouldn't, if it breaks, if you're talking about the Aussie, right? If it comes down and breaks this point, then it might be a bit too soon in the timing, right? In the lead up to the CPI. It might happen before the CPI, that's what I'm trying to say, right? It might happen before, and then it might push back up and then come back in there, or then come back down. So one other reason is that if it breaks that, so a bit of undecidedness in that triangle there. But another reason is also because if you sold at this point, you know that it could bounce off. There is a chance that it could bounce off from 657 or this area here, this point here, which is quite close. And then my stop loss is also a bit variable. I would say the best would be at 30 pips. So it becomes a little bit, it doesn't make sense that way. Right? Even if it comes into this area where it could bounce from what we saw on the 8th of May as well. So that's why I wanted to clear this whole area of so-called indecision or fluctuations. If it can break all that and then head to the downside, then I could see it break lower. Okay, hope that answers your question there. Okay, then on to the US yen. Still going to look for that. You can see that, zoom that down a bit. That level was back in on the 1st of May, where we saw the dollar index have that on the 2nd of May to the downside. I want to see a reaction at that resistance level. So yes, you could trade it up, but I'm thinking that if it comes down or comes up to this resistance level, so for now, push up gradually. Right, you could see it push up gradually towards that resistance. Not a perfect channel, so I'll take that away. But if it pushes up to that resistance, what you could be looking for is that move at that point, or a breakthrough up towards that resistance. This one I would like a straddle, 158.20, stop loss 40, take profit. It's not really a straddle, it's just a reaction at that resistance. Sorry, 115. Yep. Or if it tests and reject, then you're looking at 157.70, stop loss 40, take profit right back down again to 115. So I want to see a reaction there at that 158 level. Okay, so US yen, we're looking for a, I wouldn't want to trade up now. Look for reaction at 158, resist, oh no, not 258, 150. Could it get to 258? I don't think so. It's just a typo, not some insight. 158 resistance. Good morning, Stefan. How are you doing? Then we'll be looking. We could buy at 158.2042, 115. 158.20, stop loss 40, take profit 115 or sell at 157.7t 157.7t, stop loss 40, take profit 115 as well. Right, that way you cover both that scenarios. I would be, if you're gonna do that, it's not a set and forget scenario. Right, it's not a set and forget scenario because it is quite tight. So it's going to take a little bit more risk on this approach because you're looking for a reaction there. Once it triggers, you want to make sure that you cancel the other one. You don't want to be stuck with two trades. Okay. So far, over the last couple, I'm not going to plot all of it, but over the last couple of FOMC meetings, we haven't seen big whipsaws. Right, it's really just spiked and then slight retrace and then continued up or down. So I'll look for that. You can see that happened here as well. Right, on the 2nd of May on the news release, it was at 2. It went from 157.65 within the hour down to 157, came back up slightly before all the way down. So it didn't come back up past that starting point. So that's why I'm looking at that potential move at that resistance. Hey Stefan, how are you doing? Naren, is that considered a bearish flag? I think you're referring to the Aussie. Yes, I'm not great with chart patterns, but yes, I do think that does look like a bearish flag. What do I consider Kiwi short in dollar strength? Just because I'm looking at Aussie short, so I'm just thinking maybe if I short the Aussie on dollar strength, then on dollar weakness, I ought to look at the Kiwi. If not, then what to say? If the dollar strength does come back into play, then yes, you can sell the Kiwi down, but I would be like, priority would be Aussie dollar first. Then, on the news release, if dollar weakness comes around, okay, Kiwi is to the upside. If dollar strength comes around, then Aussie is to the downside. Done with Aussie, then I can look at the Kiwi to get into a trade to the short to the downside as well. It's just about prioritizing the currency pairs. Does that make sense? Yeah, so Naren, that's the Aussie on the bearish flag or pennant or flag. Yeah, that's why looking for it to break that area and then head to the downside. Then onto the pound, I can tell you that the pound is starting to annoy me, right? That trend line can be there, but it doesn't really serve much of a purpose. I'll take that away. Why it's annoying me is because it looks like this was where we were before it spiked down, and then at night it spiked down. And I thought it's going to trigger or push a bit more to trigger, and didn't trigger, and it started pushing back up, but it hasn't really pushed up that much, right? It hasn't really pushed up that much. It's really seems like it's trying to find a direction as well. Right, seems like it's trying to find a direction as well. And you can see that the 50% level is right there. Okay, that one away. Now, looking at that, I don't want to be, it's right in the middle. The problem with this is it's right in the middle. And I'm actually thinking, I was looking at this and I was thinking that, okay, that didn't trigger up. So we'll jump to the euro first. I'll jump back to the pound dollar shortly. That didn't trigger, so we'll take that away. Right, I was looking at the euro thinking that it could find a good support and bounce from here. Why so is because if you look at this all the way to the top, and if we took that 61, right, from this bottom all the way to the top, that 61 kind of coincides with this support level. Okay, so because of that, you see how 61 is right there, and it falls in line with this support level. I was thinking that if we see that dollar weakness continue, if we see a dollar weakness come back into play, this might be a good idea where it could bounce off this support and push to the upside. So that's what I was looking at, especially if it can break above that point. It is quite contrarian because it is pushing to the downside. But I'm looking at that 61.8 level, thinking if it holds, right? If it holds, then you could be looking at about 1.0775. Stop loss would be quite wide at about 50. But if it bounces, then we could be looking at good 115 to the upside. Right, and you saw that on the 2nd of May. Again, where was it? There. Right, sorry, push up. That move up, retrace, and then continue back up again. Right, so I'm looking at that as a potential big move as a result of this news. Right, again, very speculative, but possible chance as it sits in that consolidation just above that support level. You might even be looking at even at a 55 pip stop loss. Right, 55. Just want it below that support level there. If you want to get in early, you could even be looking at it earlier, but I think a safer one would be above that point. So 1.0770, 1.0770, break above that, 50 pips to 120. I like that. I've been looking at that one. I've been thinking about that, so I want to put that in first. We're looking at buy at 1.0770, stop loss 50, take profit 120. This is on dollar weakness. All right. Then again, like how we have that priority between the Aussie dollar and the Kiwi dollar, thinking that if the euro does spike up, or if the dollar, if we're looking to buy the euro up, obviously, if we see dollar strength, then it's a very straightforward sell to the downside that way. Okay. But I'm looking at that move as a dollar weakness scenario. Pound dollar, maybe now looking at it sitting there, we're looking for it to test and reject back down on dollar strength. So around that 50, 61.8 is up there. I think that if it stays within this range, if it comes up within this range, test and reject, I would be looking to sell it back down on dollar strength. 1.2750, stop loss 25, take profit right back down to the support at 60, and then maybe even further down. But this support has held very strongly since the 24th. Again, 30th, again, 10th of June. So I would just wait for it to come down to that point, and then after that, if it breaks, we'll have another trade further down. Right, so this is on dollar strength scenario. We're looking at 1.2750, 25 to 60 to the downside for the pound dollar. I forgot my numbers already. Let me try and figure that one. Buy at 1.25 or 2750, 25 to 60. 1.2750, stop loss 25, take profit 60. This is on DXY strength. Okay, take those away. Let's see. No, I'm not buying, I'm selling. Yeah. Okay. I knew something was wrong there. All right. Then, with that, Euro, we're done. We're looking for it for potential breakout to the upside. US Swiss franc, we had that. We talked about it with that bullish pennant or flag. That 38.2 is still holding in that area. Didn't test that resistance. I would not be too keen on the US Swiss franc, on the Swissy at this point, just because I've got other more interesting pairs to look out for. And if it does push down slightly now, could be looking at that point there. Dollar weakness to sell down. It's not a big move. Oh well, still 55. Stop loss into 25 there. Okay, oh, while we are setting up all this, yeah, Tamin, yeah, Hyder, I corrected that one on the pound. While we're setting up, just a quick reminder again is while we're setting up all this setups here, very quickly, just like that, it could change massively if tonight at 8:30 the CPI comes out at, for example, 3.6 or 3.2, right? Whatever the number here could lead to some fluctuations and reversals of price, and that would throw all of this pretty much out the window, because we are thinking of not just on the CPI but also with the FOMC broad-based decision. So very important. That's why I'm doing the Zoom session as well tonight. We can, after that news release, can update on these setups, right? These setups are really based on the snapshot view that we have of what price is doing right now. Okay, so just wanted to remind you all about that. US Swiss franc, I'll be looking for that 895025 to 55. Looking to sell at 0.8950, stop loss 25, take profit 55. On dollar weakness. Then onto the US CAD, right? It's sitting there, so we look for it to bounce off and push up. That didn't trigger. It came so close, but it didn't trigger. Take that away, right? That 38.2 and 50 level is still holding at that point. So I do want to see it bounce, but I don't see that. I see that. Okay, take that one away. I'll look for it to bounce and test that 50 on dollar strength. We could look at 50 to the upside, or maybe even a lot more. But first off would be a bounce back up, right? So I'll do that again. How I would draw it would be that, if you look at that even, right, just to catch right at the bottom there, a retrace, slight retrace now, down towards 50, bounce back up. Then I'll look to buy as it bounces at 1.37 3.5 is tight. I think this would be a theoretical setup. I don't think that it would be something that you would be able to enter. So I would still think that I'll look for that instead. Right, because why I say that is because it might come down, it might sit there and bounce, but if the news comes out and then it's dollar strength, it'll probably go past it, and you don't want to set that order at this point yet. So I still want to see it break that resistance. I think more realistic would be to see it break that resistance. 1.3795 stop loss, we can keep it tight at 20. Take profit, we can do 45. To the upside, you could even go as high as 50. I think that's a more realistic view on dollar strength for the US CAD. Right, we might give away a little bit, but we look at the momentum to push it past that resistance. So 1.3795. Where am I? Okay. 1.3795, 20 to 50 to the upside. Yes. Okay. And that's on dollar strength. Right. Then on to, I know I have to do Aussie yen. I haven't forgotten that. I'll come to that shortly. Then on to gold. Right. Naren was saying similar on gold on H4. It's actually very similar to gold on H1 as well, where we have that bearish flag. All right, where you can see that move down and then that move like that back up. So we're looking for it to break to the downside. Then for this to break, that would mean that we're going to see dollar strength, but I think that I want to see a reaction at this support. I wouldn't do anything now. Yes, you could trade it down to the support, but I want to see a reaction along this support level that we've seen it bounce quite strongly, especially when we saw the dollar drop on the 2nd of May. See on that pushing up. Right, the gold pushing up from there. So it's at a similar point where we're looking for reaction at 2280. Right, so if it breaks, and this is quite straightforward, if it breaks, we're going to see the downside. If it bounces, we're going to see the upside. But I want to see, right, we want to wait for a reaction at 2280 support level. Nothing to do on the on gold now, and then I think that would make sense. If it stays below that point, it could push down. Yes, I'll see a reaction at that. At this level here. Okay. Then onto the Aussie yen, right? When did we look at this? We looked at this on Tuesday, I think. Okay, now we have that. It's pushing up, pushing higher because of the Aussie pushing up, the yen sitting right there. So Aussie dollar gaining a bit of strength to push to the upside. Ultimately, you can see the dollar is retracing slightly, still keeping within that consolidation. On the Aussie yen, it would be, if you haven't already triggered a trade at 104.10, we looked at this on Tuesday, well, it's one day yesterday. I'm losing track of my days. It's broken off the range. So we talked about this range and it broke off the range, pushing higher, needs to close above to trade it up. you could do that. You could trade up for that 50. Right now at this point, I'll also give it a bit more space, 104.15. Take profit will be at about 50. Stop loss will still be at 25. You could trade it up. I think that if this pushes up, then we could see that reaction on that resistance back down because of what happened previously as well. So trading up could be a good move, but a better move would possibly be holding, would be being patient and looking for a reaction up at that 104.70 level. If it does push up, right? Because why I'm not so sure about it pushing up steadily is because the Aussie is pushing up, but you know, I'm anticipating that drop back, and then that's going to conflict with that move on the yen. So it could push up, but we might see a lot of those kind of move, tails and shadows, slightly higher. Right, so I would actually prefer, yes, you could trade it up in short, but I would prefer that move back down. 104.50, you can even do 104.55. Stop loss 25, take profit. You could go right down to, or you can do that first, 60 pips. Right back down to 120 to the downside. I think 60 as a first level would be reasonable. Okay, hope I answered your question there, Dinah, on the Aussie yen. Typically during the big news like the FOMC, I kind of avoid the cross pairs because these ones are going to keep me busy enough, or these ones are going to keep me busy enough. Ultimately, we're trying to figure out where the dollar index is going to go from this consolidation. It might look like it's going to consolidate all the way through to the CPI news with a bit of a spike and then a continuation with the FOMC at 2 a.m. GMT +8 tonight. Alrighty, so again, for all the members on Discord, join me at 8 p.m. GMT +8 on the Zoom session. We can have a chat, and then we'll look at the news, and then we'll update this setups for the FOMC. And if you're not going to join me, then please trade well, trade safe. As what I always say before big news is, don't feel like you have to enter a trade. There will be, or there could be situations where you see price movement but it doesn't fit with your setup or it doesn't make sense. Then don't feel like you have to enter a trade. Not entering a trade is also a strategy. Okay, and with that, I'll see you all tomorrow, same time, same place. Take care now. Bye.